Ladies and gentlemen, hello and welcome back to Talk Finance. So, in this segment, I'll be talking about wealth, worth, and income. I'll be discussing planning for financial independence, progress, and why that is important. Then end by briefly explaining fractional shares and giving an update on the shares I spoke about in the previous video. No time to waste, let's get to it. Wealth, worth, and income. Now, wealth is a measure of value of the assets owned by a person, group, or country. So a person's net worth is the value of any assets owned minus any debt owed. As I mentioned previously, income is earned through work and also can be gained from assets owned. Now, being aware of your net position can make it easy for you to set your financial goals. Planning for financial independence. To obtain financial independence, an individual must have enough money to be able to pay for living expenses without work. This can be true by saving and investing well so as to accumulate enough wealth to live off, or by generating a passive income that will continue paying out. So let's take a look at the process to financial independence. Number one, assess current situation, whereby you determine the value of assets such as cash, shares, property, bonds, and retirement funds. Then deduct liabilities, which are loans, credit card debts, and mortgage. Two, set financial goals. Begin by setting an age as the finish line. How much income will you be required to maintain a good standard of living? So, for example, if your monthly expenses are 8,000 per month and interest from the bank and the payouts from dividends at the moment can only produce 2,000 per month, then you still need more cash to be stored away or set to work, since that only covers 25%. 3. Keep up to date with cash flow. Save from income and evaluate savings regularly to ensure they are performing efficiently. The higher the yield, the better chance of reaching your financial goals. 4. Manage debt. Repay any debt or loans as quickly as possible. Look for cheaper interest rates that can bring down the cost of loans and that can also help reduce mortgage debt more quickly. 5. Investment payouts. When your investments produce additional income, use the funds to reduce any debt as well as reinvesting it to build up assets. 6. So efficient investing over time builds up wealth and you can maintain a good standard of living without the need to work. Now, I just want to speak briefly about progress and why is it so important. First things first, everyone progresses in life. The mere fact that you are living to see another day is progression, but it's not unique progression. In my opinion, I believe unique progress is the progression that only you as an individual or as a group or a country can have. It's what sets you apart. Y is equal to mx plus c. Now I'm going to need you to calm down. I'm not teaching maths or anything. This is just something we all have learned in school, and I want to use it to make or aid me in my explanation. Now, when it comes to our lives, this illustration is a simple way to make you understand progress. So y is the result we get from mx plus c. X is the time, day to day, month to month. C is the constant. This is the most important variable in the equation when it comes to life. But as we all know in the equation, C is the least noticeable. M is the rate of change. And this is what sets you apart. This is what is unique to you. The constant represents consistency in your life, learning and teaching yourself new things, ways to improve your life positively. I just need you to know that learning never ends. There is always something new to learn, but we choose not to. We shy away from this particular aspect, just like how the C is not really noticed in the equation, but it brings so much more when it's there. More so when it comes to your finances. talking about it, whether it's with your family, spouse, or children. M is the rate of change, the speed of your progression. This generally revolves around the steps you take, the decisions you make, and the impact of those decisions. X is the time you have. It's so precious because we all have it. It moves the same way. You can't have 48 hours and I 24 at the same time, in a sense that a minute to you is a minute to me. Your time is not moving slower while mine is moving faster. It's all the same. It's precious because you can't get it back. You waste a day, you have wasted a day, period. Y is the result, the things you've obtained or obtaining. This represents the value you've built for yourself, which comes down to the decisions you make or made and the time it took or takes for you to get these things or that particular outcome. And most of the time, you need consistency to get the end result. Let's look at an example on progress. So we have two lines, A and B, and we are looking from 0 to 6 years in this case. And P is the measure of the progress. Since this is talk finance, we will say P is the amount you save. So at 0, we have two people, Miss A and Miss B, planning to save money. Now, Miss A is very committed, has a solid plan, and fights the urge to take from her savings. Miss B, on the other hand, doesn't have the same commitment and feels that for any small problem, she can take from her savings. 6 years pass, and you can see that the level and the difference between the two, to a point where when 6 becomes the new 0, as in it's a start to a new phase, Miss A will be on a higher foundation than B. This is where you shift P to P comma, as you can see with the green line. So with that green line, Miss B is on a lower point and Miss A is on a higher point. So if they are starting something new, Miss A will have more money to commit to that new thing. Progress can be positive and negative. So if for 10 years you were incurring debts, owing people, etc., you can see that you are progressing but negatively, which is a bad thing if you are unaware of future consequences. Fractional shares. This is just to make you aware that if I say a price of a particular share is 200 rands, that doesn't mean you need 200 rands to buy that share. Even if you have 50 rand, you can still invest in that company because of this concept. And a little update on the shares I've spoken about, Old Mutual and Enterprise Product Partners. Old Mutual is 11 rand 74 cents from a price of 10 rand 52. So if you bought some shares 2 to 3 months ago, you should be sitting on a profit. Enterprise Product Partners, EPD, is $26.61 from a price of $25.25. There's also a dividends of 0.49 cents that was paid on the 14th for those who bought the shares before the 30th of January. And that brings us to the end of the video. Don't let money stress you out. You want to secure your financial future, subscribe to the channel for more insights. Thank you for watching, and I'll see you on the next video.